Hey guys, this is Rudy for Bester Investor. So I told you the last video that I was going to go away on business for a couple of days. In fact, I didn't say I was going away on business. I just said I'm going away for a few days. But as it was, I was working. I didn't go on vacation, and because I was busy working, I didn't pay too much attention to what's happening and going on in the stock market. And I come back and all hell is broken loose. So. I noticed that people are talking about GameStop. Since when are people talking about GameStop? And then people talking about AMC theaters. Like, well, we haven't been to the movies for like a year, and suddenly we're talking about AMC theaters stock. Um, and then Oxy, as usual, after it hits a high of $24, starts declining again until we get the next peak again. So a lot of stuff going on. But I was looking at this and saying, what the heck is going on? So this is Rudy for Bester Investor, and I do want to kind of take a quick look here at some of these things that have been happening all around us. So I noticed that AngelList, these guys were saying fintech behemoth Robinhood drew the ire of Reddit this week when it restricted trades at GameStop amid an epic short squeeze that is causing havoc from Wall Street to the White House. Members of the 4 million strong Wall Street's bets subreddit were apoplectic to learn Robinhood and other trading platforms restricted trading after they had successfully driven GameStop to astronomical heights. What is going on here, guys? Let's take a quick look and see what's happening, and I'll see you on the other side.
This is what you came for. Oh, this is what you came for. I'm over. This is what you came for. I'm over. This is weird. She said, I'm ready. So come and get me. I'm over here. I'm over here.
All right, I suppose we could file this one away under nobody told me they'd be days like this, maybe weeks like this. It's been a very, very busy week, but let's take a look and see if we can figure out what's actually going on in the crazy world of stock trading. Let me share this presentation with you guys so that you can sort of see what I'm trying to get at here. All right, so for an old fundamentalist like me, studying fossil fuels, and maybe one of the reasons why I study fossil fuels and energy is because I'm an old fossil myself, but I had never in 100 years thought I'd be making a video comparing Occidental to GameStop and AMC. I mean, this just doesn't make any sense at all. Initially, I thought this has got to be like boomers against millennials or something, but then I found out it's YOLO against fundamentals. And for someone who studies fundamentals like myself, I look at all boring fundamental things like a balance sheet and assets and liabilities and share owners' equity. And then I look at the profit and loss statements, and I look at free cash flow and production and all that kind of stuff. Like maybe all of that is now irrelevant, and I should actually be focusing on the fact that you only live once. And throw all the fundamentals out with the bathwater. I'm not sure, but I'm kind of taking a look at this with a new set of eyes, wondering to myself what's going on here. But anyway, in case you didn't know, just sort of down the road from where I live, in Fort Lauderdale in Florida, there's actually a place called YOLO, which is you only live once. And if you can afford to have breakfast there and you drive one of these vehicles, you can drive up on a weekend morning. And hopefully the valet takes about 10 or 15 minutes to park your car and to get you to a table inside, because that way you can actually show people that you subscribe to You Only Live Once. This GameStop YOLO, though, seems to be something completely different. Firstly, I briefly mentioned in the intro that some people are really upset about some trading restrictions. So how about this one? One of my main trading accounts, obviously, is TD Ameritrade. I mention it often during my videos, and they say we have placed restrictions on the following securities. And I looked at this and went, yeah, blah, 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 blah. This is Wall Street protecting its own. In reality, what they did was they really wanted to restrict trading on AMC and GME, AMC theaters and GME being GameStop. The rest of the ticker symbols are kind of largely irrelevant, maybe a little bit of BlackBerry and some car speakers and stuff like that. But no, 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 no. You're doing this purely to protect your friends, the hedge fund managers. They say the following restrictions are in place. Stocks, 100% holding requirement. You may not sell. You can buy if you want. So what are they actually doing? If they say you cannot sell, that means they cannot squeeze the shorts any further. And if they say only long calls and puts are allowed, that means you can only buy, effectively protecting their buddies who are shorting the stock. So let's take a step back first and do the mandatory quick update on fundamentals. So this is a quick look at OXY. We can see it closed today at $21. I know it's down more than 10% from its $24 high, which was achieved just 2 weeks ago on January the 14th. That already seems as if it was like a year ago. But for the people who follow OXY, you will know that every time it spikes to a new high, it pulls back a little bit before it spikes again. The same thing is going to happen again. This is just people taking profit. And of course, we still have to wait for another 2 weeks, just over 2 weeks before they announce their fourth quarter earnings from 2020. The good news for OXY longs is that unlike GameStop, the short interest is only 3.4%. So hopefully we can avoid a short squeeze on Occidental. However, if there were to be a short squeeze, you could probably make an enormous amount of money. So, fundamentals get thrown out with the bathwater on this one because it just doesn't work the way we think it does or the way it is meant to work. GameStop closed today at $193.60. Who would have thunk? This literally is like a $2 stock. Market cap today, $13.50. Yesterday, in fact, GameStop almost hit $500 per share and a market cap of 22 billion something. So if you really think about it, this bankrupt mall retailer with hardly any assets, no money, had a market valuation of more than 10% greater than Occidental with all its international assets. This company, Oxy, that pumps over 1 million barrels of oil equivalent per day from assets all over the world or in multiple jurisdictions, has a market valuation of 20 billion, but GameStop soared to 22 billion. Man, I hope some of these people took some profit along the way, because if they didn't, they might be in for a world of hurt. Anyway, it hit a high of almost $500, pulled back to around $200 at the close of market hours today. But then, since the close, and this is no longer valid because this was taken at 17:19 p.m. Eastern time, and it's now a little bit later than that. In fact, it's just after 9 p.m. GameStop, after the market close, soared up again 68%. $131 to $325. So it closed at $200, and just within an hour or two later, it was trading at $325. I mean, this is the kind of stuff you file in the folder that says, I never saw this one coming. GameStop, here's the primary reason why. Short interest sitting at 122% of the outstanding float. You know, when you get to a short situation where people are shorting the stock and they're shorting more shares than what they are outstanding in the marketplace, they are setting themselves up with an awful amount of hurt, because this is just a very high risk position for those hedge funds to be in that are shorting GameStop. And a perfect play, all credit to the guys on Reddit. There's my rhyme for the day. For saying we're going to get these hedge funds taken out, the guys who are shorting GameStop. They're buying GameStop seemingly for no other reason than to take out the sort of proverbial 1%ers who are shorting the stock. What about AMC? I mean, look at this thing, right? This sort of the proverbial dog in terms of the greater scheme of things. 52-week range, $2 to $20. Closed today. Closing price, $8.63. And since it closed, up almost 45%. $12.38. Look at the spikes. I mean, this is just awesome. It's like the craziest stuff. This is not the kind of things that make typical people who spend their time and energy studying stocks to try and figure out what are good investments and undervalued stocks and not. Um, this doesn't really necessarily make any sense, but boy, are we required to pay attention to what's happening here, because this can impact you somewhere along the line in some of the stocks in your portfolio, whether you like it or not, and you may not even see it coming. Just a quick little note here, AMC shares are trading lower. The stock has been increasingly volatile following interest from retail investors and Robinhood limited trading in the stock, telling users they can close their positions, but they cannot buy additional shares. So the same situation as the play with GameStop, effectively restricting the sellers or the users of Robinhood, saying you can sell, but you may not buy additional shares. AMC, there's the spike I was just talking about. This is AMC for the past month. Look at this flat line and like $2 and boom, $20. So the returns have just been off the charts. It's just been crazy. So what do you think, guys? Is this just revenge? Sort of revenge of the nerds kind of thing? Is this just the guys on Reddit saying it's payback time? And these hedge funds who have been shorting the stock are gaming the system, and it's their just rewards. Let me know what you think in the comments. It'd be an interesting discussion. And of course, as usual, if you haven't hit the subscribe button yet, please do so, because I'd appreciate it if we build a great community of like-minded investors who can actually chase some real value, investing in undervalued stocks the old-fashioned way. So let me know what you think. And this is Rudy for Best Investors signing off, saying thanks for watching. Bye-bye.